Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Lynn & Associates with your agriculture update. And this is going to be your weekly version for the weekend of Memorial Day, the 26th of May, 2016. We're around 1:45 in the afternoon, Central Daylight Time. The beans are taking it on the chin. They're down 13, the meal down, the corn market a good bid into it, and the wheat market up. Now, here's part of what's going on. There's an item called crop insurance, and in many parts of the country, farmers at a certain point have to declare if they bought insurance, hey, my fields are too wet, I can't get my crops in. They go to their insurance company. They'll rotate either and try to plant another corn crop, depending on what the insurance company says and what's going on there, or they might switch to a soybean market, and that's because in parts of the country you're already getting late for corn, but beans can still be planted. That's putting pressure on the soybean market. We have rain in the forecast in a good part of the Midwest through different days of the weekend. So when we come into the office back on Sunday night, markets don't trade in grains. Monday, markets will begin trading at 7 p.m. So remember that for the Memorial Day weekend. I don't believe the grains, you might want to check that with your broker, but I don't think they're open Sunday. I think they reopen on Monday evening, and that's where you'll start seeing the fireworks off of what the weather did or did not do. But again, double check me, okay? When we come here and we look at the chart, you're trying to break out to the downside. You're leaning right on the bottom of this whole line, and that's where you're at. So if you can get through here, down. One of the things I've been telling you is many of the trade firms are looking for this market overall in beans to be an 850 market. Now, I'm not talking on the, this is a continuation chart on monthly basis, so I'm not pinpointing for you the July or the November beans, but I am telling you the continuation charts, that seems to be what traders are talking about, which is back into this general area, and that seems to be, if you can break out here, a possible target for the market. When we come to a chart of weekly, you've now gone from 963, broken through everything, and today's settlement price was 926.5. There's nothing on that chart that you can be bullish on. That doesn't mean you can't get a bounce and all of a sudden the market's going the other way. But if you're a chartist as I am, there's nothing there at this point in time that says the market should get a big rally. When we come to closing price, well, actually this is going to be the high and low. It's going to go from 980.5 to 925.25. This was the closing, the set of closing prices. When we come to the swing line study on the weeklies, we've got a pretty clean pattern of lower highs. Now we certainly have lower lows in place all the way here. Still very much a bear market until you take out 980.5. When we take a look at key moving averages, you have not been able to get back to the 18-week moving average of closes in red. You did get to the 100-day. You're failing at that number, and that failure is important because often you get a move that looks a little bit like this, and you try to extend and see if you can get up there and what's going to happen. The fact that you're really letting low under that number is very, very bad. The odds still favor more follow-through is what I'm saying. When you take a look at how much follow-through, well, I go to the Bollinger Bands on the weekly chart, and it's possible 903. So let's call it the $9 area is the next zone, about 26 cents away. Not a big move, but one of the areas that you'd be looking at. When you look at momentum, it is just locked in and pointed lower. So this chart still looks, as far as I can see, from every aspect, momentum, bias, and trend to the downside. Meal market is identical. Could not get up to the 18-week average in red. You got to the 100 in the green dashed line, and now you've kept that pattern of lower highs, lower lows. So 295 is your next downside target if the market is going to make a run to the lower Bollinger Band. It is still staying, though, overall in this big sideways band that was created and began back here in February. So it's got quite a period to it, and it's still valid at this point.
Did soybean oil peak out this week? May have. Market got to the highest recent rally high since the month of March and let go, went back today and finished off towards the 100-week moving average. You're not trending like you are in meal and oil, and part of that has to do with the crush spread. What's got a little more value? Is it the oil content? Is it the meal that's going to have a little more content? It gets convoluted there as you start playing with the crushes, and crushes means you take the bean, and that's what you do, and you're crushing it for the two contents that come out, the meal and the oil. Well, as you come down here, this support area, if it decides to give ground, then 30.63 may be the next stopping spot. In the corn market, I was not surprised as the market rallied up now, and I'm talking today, and started finding resistance up here in the 377s. It's where it should be expected. It's your upper Bollinger Band. But the interesting part of corn on a weekly chart is you can step all the way back here, and all the way. I'm talking to last summer. You haven't hit a lower Bollinger Band since that point in time. You've hit on numerous times trying to break out to the top side of this market. Could it be that this market is finding itself a longer-term home to the upside? It just might be. The wheat market is coming alive. Momentum is picked up. You have held now for 2 weeks an important number, staying number one. Higher lows, higher highs, and over the 18-week average of closes. Today's move, I think, puts this area into play, which is the 447 3/4 to 452 level in the Chicago wheat. In the cocoa market, you have a pattern of a lower low, a higher high, bias is down, momentum is doing nothing. Difficult market right here. Sugar market, sugar got smashed today. And you can see for the week it's down $1.33. Overnight Petrobras, which is the big energy user, producer actually in Brazil, surprised the markets by cutting gasoline prices 5.5%. Now what they're doing is they cut that, you don't need as much sugar with the ethanol. In other words, they're trying to grab market share back. That was bearish, this market. So be careful here, because you're going to see that they have a big crop in Brazil of corn. Their harvest is over. They've got to do something with it. They've got problems in their economy, in their government. Is it going to be overthrown? Nobody quite knows. Most farmers are holding on to the product temporarily, but if it's got no value in the ethanol, what do? And that becomes a problem for them. So I am just looking at two parts of this market, the ethanol, and I'm looking at sugar as it goes for that. So you got crop corn and you've got sugar that you've got to pay attention to here. In the coffee market, you went down, challenged the lower Bollinger Band, but couldn't get through it. You've got your momentum that's flat in the market, and the trend is down. I'm going to guess that the 100-week average is going to be your battleground in this market. It does have a seasonal at this time of the year that's often weak. Then we get to the all-important cotton market. Now, we knew that 2 weeks ago, the market had roared dramatically higher, up to 87. It's given that all up, and you're back to 77.25. The fear was there was a lot of producers that had not priced in their cotton. They were chasing, how do I get the cotton? I've got to deliver it to the mills, blah, blah, blah. That whole, and it's called a pricing situation. They've gotten that done, and the market's back to normal. So now the question is, right here, does it keep its uptrend? If it gets under 76.17, the answer to that is no. If it can hold here and bounce away, I could still make an argument of a move back into the, certainly the 80 area, 81.77 is in a Bollinger Band if it holds together. Momentum is fighting that. So you've got bias up because you're still, well, actually the bias is slightly down. You're going to finish off, I think, at 77.16 in the July cotton. May goes off now. It's gone already. So I think this is going to be a very important area, and we'll see if this market wants to let go. If it does, you could be going to 72.73. In the cattle market, it won't take much on the weekly chart if you get under 120.57 to have a pattern of lower highs, lower lows, momentum pointing down, a bearish situation. The cattle on feed report came out today, and it was bearish. We put a lot more cattle on feed. Agreed, we marketed 1% more than the trade was looking for, but that's the nearby months. the further back months are going to feel the pressure of more cattle in the feedlots, and that's what you're feeling in this market right here. The hog market's different. We're talking in our firm, and we're having big meetings on it. There's a lot of talk that China is going to be increasing purchases from the U.S. over Germany in pork by big amounts. And that's because in Germany, the domestic producers are able to sell on the domestic market at a big margin, actually a bit more margin they're saying that they can get from China, which puts us as then the largest importer from China for the pork. So you've got to pay attention. Now, admittedly, you're 2 weeks in a row over the upper Bollinger Band. Momentum's up. The market's been on a tear, one-way tear, and it's overdue for a potential correction. Will you get one becomes the question of traders in my firm that are fundamental traders. As a technician, I would never tell somebody to buy over or sell under a Bollinger Band. So that's where you're at, but I do see huge support back in this area. I don't know if you'll get back to that or not. So when I put it all together, I think you're going to have a very interesting week coming up, and I think the summer's lining itself up in the grains and the meat markets to be very exciting. With that, we offer our charts of the day. Now, try to imagine, you hear people talk that a market moves, gets a move, chops around, all of a sudden it might start down. What are the counts that it might go to? I'll give you an example. If you get our chart of the day already, today was the Mexican peso. Rarely do you go to the third price count. You can, but it's rare. The first seems to be over and over. Not every time, but believe me, very high percentage. The second, a little more common. The third's the harder one. And fourth, very difficult. But you're getting setups, and you're now at that point. Do you make the third run there? Well, what about the grains? Are they bottoming out here? What about cattle? Did it just make a peak in its pricing at this point in time? Remember, we're through at the Memorial Day. You want to get this because it gives you guides, gives you ideas that if these setups happen, the what-ifs. Call us. Go to our website. You'll see a carousel of free offers. You can click right up here if you're watching us on YouTube. It'll have chart of the day in there. Or under us on many websites, it'll say, click here for Ira's free offer. Do so. It'll bring you right to the forums. Take advantage of it. I'm Ira Epstein. You have a great Memorial Day weekend. Remember, my next videos for you after the one more today of the financial will be what? It'll be Tuesday. Have a great holiday.